Hello, ladies and gentlemen. Hope everyone is well and having a fantastic week so far. This is the second video that I've put together for you on my new YouTube channel. And the aim of this video is to deliver another blockbuster of a stock, which I believe has a very, very high potential to explode in terms of value and in terms of providing a solid long-term investment. As always, I'm not a financial planner or advisor. I can only provide my recommendations based on data. I do recommend that you conduct your own due diligence on any stock that you're looking at buying, because this is the nature of the stock market. Education is an ongoing process. So a bit of an overview regarding the stock market for today. We're the 4th of September. The 3rd of September. Time flies. Now, we are looking at a bit of a red market. Traditionally, every single year for the last 100 years, let's say, the stock market was down in the month of September. A lot of people are panicking. There's a mass sell-off happening at the moment, and this is actually the type of opportunity I've been waiting on the entire year. You can almost say that every September of every year, I'm literally just celebrating, waiting for the opportunities. I have my cash ready. I'm ready to go in and buy everybody's discounts. So people basically just panic sell, and retail investors who are value investors, such as myself, we call ourselves value investors mainly because we want value. We're waiting for undervalued stocks or very severely undervalued stocks, which have the highest potential to rise up again in value, and therefore helping us, live that amazing lifestyle that this provides. Some of my main holdings: Google, it's moved up 8.39% in the last 24 hours, and this is one of my strong holdings. I've got also shares in Apple. It's good to see Apple has moved up. Everybody was panicking about Apple, saying it's going to keep going down, but no, it's all about the numbers and patience at the end of the day. So this is what you need: numbers and patience, and this is how you get rich in this market. So without further ado, let's talk about the stock that I'll be presenting to you today. And I recommend you stay for the duration of the video, because I'll be providing educational points as to why I have selected this particular stock. And of course, the more you understand why I've done it, let me hide this. There we go. Go away. And this one as well. You can't stop this. Now, the more I explain to you exactly why and what are the metrics I'm looking at, what is the target pricing, you'll have a good idea of why I'm doing things the way I do them. My solid track record of success in the stock market is a testament that this process works, rinse and repeat. So let's talk about it. The stock in question is ASML. ASML is the world's supplier to the semiconductor industry. Think NVIDIA, think AMD, and all these different, you can say, chip manufacturers out there. ASML gives them the technology. It gives them the facilities for them to be able to produce these semiconductors. So ASML is it's a company. It's been founded in 1984. There you go, 1984. Headquarters is in the Netherlands. This is a company that has stood the test of time, and it's actually gone up in value ever since. Let's dive into the fundamentals right now, which is what I deal with, to explain exactly what it is about this company that I like so much, and obviously make sure that you follow. Let me know if you have any questions or feedback during the duration of this explanation. Starting with TipRanks, one of the first tools that I use, I want to see that there's a positive upside to this particular stock, and you can see ASML, the analyst ratings, a moderate buy, which is good. However, the ASML stock 12-month forecast is set to be, an increase about 18%, which is pretty good from where it's currently at. This gives me a lot of confidence that this particular stock has a lot of room to grow. So with this out of the way, we can move on to the numbers. And this is done through Seeking Alpha, one of the most important websites out there when it comes to looking at metrics. One of the first things I look at is the PEG ratio, the PEG, the trailing 12-month PEG, which is very, very important. This needs to be below a 1. So anything below a 1 tells me that the stock is undervalued. And compared with the sector median, it's still much lower, which is fantastic, meaning that definitely the stock is undervalued and it has a lot of leg to grow on. You can see that the analysts have given this a buy rating, all three analysts. The Seeking Alpha analysts, Wall Street and Quant have given this a very solid buy rating. Excuse me. And one of the other items I look at is this one here, the PE ratio, the trailing PE ratio and the forward PE ratio. The forward PE ratio typically needs to be lower than the trailing PE ratio, because if it's lower, it tells us that the analysts are expecting the company's numbers to improve over the next 12 months or into the future. But this is a slightly higher than 25.5. I wouldn't worry too much about it. Still lower than the sector median of 29.99%. So this is giving me all the right information regarding this particular stock. And if we were to look at the ratings, I typically like to look at the Wall Street analyst ratings rather than the other two. You can see that the Wall Street analyst ratings given this an upside of 13.74. Again, this is pretty solid. In terms of the growth, the dividend growth is A+, another thing that I do look at. Everything is giving me a lot of confidence so far. One of my favorite tools is Stock Unlock. Guys, I do recommend you to have, if you're going to pay for a tool, let this be it. I do have a link in the description, by the way, if you would like to try out this tool. With Stock Unlock, this saves me a lot of time and headache. I don't particularly like, and I've never been a fond of looking at bar charts and line charts and any type of charts. I'm not that sort of a visual guy. I prefer dealing with numbers and preferably a summary of everything. And the section that I look at, which is of interest to me, actually, let's first go to the analyst rating. The analyst rating is an average of $889. It's telling us it's got a 21.3% upside potential. So this is actually, again, a number I look at. It needs to be, the average consensus needs to be in the positive. It needs to be in the green. And that's exactly what we're seeing. Anything 10% and above is what I look at, because I want to make sure that even if it goes up by a few percentage points, that's the worst case scenario. And it's got the potential to go up to 57.3%, all the way up. Now, let's go back here. And the section that I am most interested in is the growth section. The three items I look at is, firstly, this one. Revenue increasing, it has to be very good. It is very good. It's moving up. Fantastic stuff. Free cash flow increasing. It's increased by 224%. This is amazing. So it means that ton of cash to play with. These guys can take the cash, take it all the way home, and invest in new technology, into new findings, do a lot of research and development. They have money to burn, baby, as we say. The operating cash flow increasing, this needs to be very good as well. So this is some enormous figures. And the other item that I'll look at is this one here, return on invested capital. This is quite important. And at the moment, it's very good. Just to explain what this is, ROIC for short. It's also known as return on capital. It's one of the most important metrics investors take a look at when they're analyzing a company and its ability to generate return for shareholders. ROIC shows investors how much profits the company's invested capital generates. So simply put, it's a very important metric that needs to be part of your arsenal. With everything being checked here, we can move on to the next item that I'll be checking, which is the company's assets versus the liabilities plus debt. What I tend to like to do is add all the liabilities plus the debt, the total debt. So we add this to this, and the total figures needs to be lower than the total assets. So let's say 32 billion plus 4 billion. That's about 36 billion. That's still lower than 52.65 billion that the company has in total assets. So it means that company can wash its liability just like that, snap of a finger. Again, this is another very, very positive indication that we are investing in a company that's serious about not just making money, but investing and bringing its debt down. Let's talk about the final piece of the puzzle, which is the moat score. This is very, very important. I like to see the moat score of a particular company to see how safe it is from all the competitors. And what we can see is that ASML has a moat score of 10 out of 10, which is very, very solid. It says here, it's one of the most fortress-like businesses on the planet. I love this. And there are a few reasons why. It's got monopoly in the EUV lithography, which is the technology that's used to create these semiconductors. It's got technological complexity, long-term customer relationships. This refers to customer stickiness. a very important term. I want to make sure that it's very hard for the customers to exit a company because the exit fees are very high. And, we say the money is in the recurring revenue. So ASML is making money hand over fist from these, customers that are always coming back to them for the technology and for the expertise. Massive moat. The only caveat, the only risk is China, I'd say, at this stage. But as we say here, its biggest risk is not competition but geopolitics. But even then, demand is so strong globally that ASML will sell everything it can build for years. This is all, again, pointing in the right direction that you are dealing with one of the solid stocks out there that's currently undervalued. So, the last slide, let's go over here. Don't know what this is. Let's talk about the target price of this particular stock. The target price that I'm aiming for is this $863.83. That's an upside of 17.92%. Very, very healthy indeed. And one item that I have to mention here is that the target price can change over time. So I like to visit the target price every couple of months or even every month just to see that whether the target price is improving or not improving. The way I like to do and operate is that as the stock price keeps going up, I look at the target price that TipRanks actually provides. One of the first screens that we looked at was TipRanks. So the TipRanks is giving this currently a 17.92% upside. So guys, there you have it. We've talked about ASML, very solid stock. It's got the moat, it's got all the fundamentals. Everything is checking out okay. And it has a very healthy upside indeed. Let me know if you have any questions or any feedback. Love to hear them. And I'll keep you posted on the next stock pick that I find. Thank you. Good luck with the stock hunting.